If you're new to the channel, then welcome, and if you're returning to the channel, then welcome back. I just want to extend a quick thank you to all of you for tuning in. Now, over the last few weeks, we've spent a lot of time focused on the presidential election and the future of the economy. And it's during these videos that we've kind of talked about or brought up some of the different economic and tax policies that could be implemented under a Joe Biden presidency. And now this is more important than ever because it seems like a Joe Biden presidency is the direction that we're headed. Now, for myself, the topic or the policy that I've been most interested in is what kind of economic effects that we could expect from seeing an increased corporate tax rate, which, as we've talked about in the past, is one of Joe Biden's tax policies. Now, when it comes to any economic plan, or especially a tax plan, there's always going to be some level of criticism and scrutiny, and Joe Biden's tax plan is no exception to that rule. A lot of people speculate that what we'll end up seeing in an increased corporate tax rate is most of that bill or most of that tax will be footed by either the labor/workforce or by the consumers. And this could be something through lowered wages or increased prices of consumer goods. And I think on the surface, this is an intuitive idea. This is an intuitive conclusion to come to because our expectation is that corporations and companies are always going to do what's in their best interest to maintain profits. But does increasing the corporate tax rate actually lead to some of these potentially negative impacts that we are talking about? It's that question that brings us to today's video. Now, as always with these types of videos, I do like to give the disclaimer that I'm in no way a tax expert or an economic expert or any related field. The fact is, I just enjoy reading about this stuff and researching it, and then hopefully generating my own perspective and relaying that research and perspective back to all of you. So let's just start out with some basic info on our topic here. Currently, the corporate tax rate sits at 21%, and this was implemented in 2017 by Donald Trump's, I believe it was Tax Cuts and Jobs Act of 2017. Prior to that, the corporate tax rate was at 35%, and this was from 1993 until 2017. And even prior to that, in the early 1900s, it's been as low as 10%, and when it came to the 1960s and 70s, I believe, it was as high as 53%. Or 52.8. So it's safe to say that over the last 120 years, we've definitely seen a lot of fluctuation. Now, when it comes to researching topics like this and, formulating an opinion or taking a hard stance, which I'm going to try to avoid doing, I do like to start off my research by focusing on scholarly work or academic work done by actual economists or economic experts. Now, of course, those studies and papers themselves can be flawed, but I feel like they're going to be much closer to ascertaining a certain truth about this subject matter than I would be able to on my own. And it's once I've taken that approach that I like to completely do the opposite, which means going to internet forums and places like Reddit to see what other people think about these ideas. Now, of course, when I'm reading and analyzing these opinions of random people on the internet, I do try to frame it through the lens of what I've learned from the academic sources that I was researching. And as much as the internet can be full of nonsense and BS and misinterpretations, there are sometimes gems that you come across that will really boost your understanding and give you a totally new perspective. And at the end of the day, if nothing else, you do get a sense of, what people's perceptions are about these ideas, whether they're right or wrong. So for this video, I do want to focus on mostly the academic research that I've done, the scholarly research that I've done, and try to formulate an opinion or an understanding of what happens based on what those papers are saying. And this brings us to our very first study or our very first paper that I came across, which was titled, "Who Bears the Corporate Tax? A Review in What We Know." Now, this paper was authored by Alan J. Auerbach, who is an American economist, and he's also the director for the Robert D. Birch Center for Tax Policy and the Public Finance for University of California, I believe. At least that's what I think I remember Google telling me. Anyway, so this paper was published in 2006, so it's not completely current or up to date necessarily, but it's still modern enough that I think it would be relevant. And on top of that, this was during the time when the corporate tax rate was 35%, which means that Auerbach was doing his research in the thick of the highest corporate tax rate that we've seen in the past 50 years. Now, the focus of this paper was not necessarily what happens to prices, but trying to identify where the corporate tax burden falls Does it fall on the capital? Does it fall on the labor? Or does it fall on the consumer? And it seems like, based on Auerbach's findings, that most of the tax burden actually falls on capital or shareholders, and actually more so than originally thought. However, the implications from that can actually cause the tax burden to shift to labor. So it's basically a mix between the two, but what actually happens to prices? Well, unfortunately, there's only a couple of small references to prices and the impacts that could fall on the consumer when it comes to this paper, but here they are. The first is in the form of a reference to a model that was analyzed, the Harburger Model, and this was developed by Alan Harburger as a way to analyze and understand corporate tax rates. Basically, Harburger identified or estimated that if we saw an increase in the corporate tax rate, then it's conceivable that we could see a small increase in the price of goods as well. Not mind-blowing, and like I said, it seems like an easy conclusion to come to. The second reference was in relation to a study performed by a name that I'm probably going to butcher. I believe it's Krazaniak and Musgrave. Now, this study was very interesting because they found that of all the data that they gathered and looked at, they actually saw an increase in after-tax profits as the corporate tax rate increased. So one might be able to conclude that if we raise the corporate tax rate, then the corporations are going to see an increase in after-tax profits. But hold on, the speculation of this occurrence was that it was caused by the increase in prices of goods. But the interesting thing about this study is that it did not actually capture the method of the corporate responses, so there's no definitive evidence as to why we saw an increase in after-tax profits, even though the corporate tax rate increased. The speculation was just that it was probably due to an increase in prices. So when it comes to this paper, we didn't learn too much on what the impact on the prices would be from an increased corporate tax, but there was a lot of information regarding whether capital or labor is more impacted. And the conclusion of that seems to be that in the beginning, or maybe in the long term, capital tends to be more impacted and carry more of the tax burden. However, we can see a tax burden shift which impacts labor as well. Now, for the second paper that I read, I decided to get a little more specific with my Google search. And as it turns out, Google follows the principle of ask and you shall receive, because I found a paper that was published in April 2020 titled Corporate Taxes and Retail Prices. There are three main contributors for this paper, the first being Scott R. Baker, who is a professor of finance, Konstantin Yanelis, I believe, who is also an assistant professor of finance, and the third being Stephen, or maybe Stephen Tang Sun, who is an assistant professor of I believe it was accountancy and applied economics. So again, trying to focus on, experts in that economic field or related subjects. Now, this paper actually kicks off with a bit of a banger, saying that 31% of the corporate tax burden falls on consumers. And it's this finding that suggests previously used models by policymakers severely underestimates the impact of the corporate tax burden on the consumer. On top of that, this study also identified that for every 1% increase we see in the corporate tax rate, we see a 0.17 increase in the price of what they call barcode level goods. Not only that, but the effects of the corporate tax burden are actually felt mostly by lower quality or cheaper goods and products, as well as by low income households. So right there in the abstract alone, there's a ton of information to unpack and a lot of really interesting findings. Now, I do want to point out that the paper itself does make references to some of the older studies that we've seen, and specifically mentions the Harburger Model. So it's not denying that we're seeing obviously some impact on the capital or labor force as well, but it's mostly pointing out that you do see a much larger impact on the consumer level than was originally anticipated. And on top of that, it aims to produce an actual number or some actual figures on how much the price increases based on the corporate tax rate increase. So the findings that we're taking from this study in this paper is consumers play a large role in covering the corporate tax burden. In fact, they cover basically a third of it. There's also a marked increase in prices, as myself and a lot of other people have suspected. And the corporate tax burden particularly impacts people who are of low income or who buy low cost goods, which is a little bit ironic because when we think about who a tax should be helping, it's generally people who are on the lower income side of the income spectrum. And on top of that, we want corporations to pay more in taxes simply because they make more money. And instead, what we're seeing is that at least a third of the tax burden ends up falling on the consumer, at least from what this study says. So based on the first paper, we can see that it's been theorized and kind of reasoned that, yes, it's possible that you would see an increase in the price of goods if an increase in the corporate tax rate occurs. But there wasn't much that was concrete in terms of evidence or producing actual figures that would show how this would happen or to what degree. In our second paper, we actually see a study that takes the aim at answering the specific question that we asked in the beginning of this video, which was determining how prices are affected and by how much. And it also shows us that quite a bit of the tax burden ends up falling on the consumer, which was much more than previously thought. So the evidence does seem to show that if we see an increase in the corporate tax rate, a lot of the burden, or at least a third of the burden, ends up falling on the consumer, and we do see an increase in the price of goods because of a corporate tax increase. Now, these are only two studies that I looked at that cover this topic of the corporate tax rate. There are obviously other numerous ones available out there for people to look at and research as well. Also, keep in mind that we're studying this, or I'm looking at this from a very focused point of view on just what happens to prices and who bears the responsibility of a corporate tax. The reality of the situation is that just because the corporate tax rate increases and just because we see a price increase on goods does not necessarily mean that that kind of small negative impact doesn't have a broader positive impact. Again, we're looking at this, or I'm looking at this specifically in the narrow point of view. I mean, it's possible that collecting more taxes means creating a federal program that ends up being really beneficial for everyone. Which is, kind of a long shot, but one can hope, one can dream. I think the best conclusion that we can draw from these two studies is that there will be some kind of costly impact on either shareholders, the labor force, or on consumers when we see, or if we see, an increase in the corporate tax rate. So if you enjoy content like this, hit the like button. It lets me know if you want to see more. Comment down below letting me know your thoughts on this subject matter. And as always, I will see you all next time.